If you want to be a millionaire, you're going to have to learn this stuff.
You're forgetting Mamdani came into the picture now.
Yeah. Get him, Jose.
So did the.
You should have a timer, Jose. I'm about to make you true to this.
Oh my God. What are the documents that are needed in order for someone to be reviewed for a mortgage, whether it's primary, whether it's investment or commercial?
Well, on the primary side, the number one product for primary homes right now in America are FHA loans. That's what most people are qualifying for. For that program, you need a proof ID, which is the license, a proof of down payment on a home that you gave your down payment, last 2 months bank statements to show you have the liquidity or the money to close on the property, meaning that you have enough money for the down payment and closing costs. You also need proof of income. If you're a W-2 employee, they'll need the last 30 days pay stubs. Either if you get paid every 2 weeks, that equals 2 pay stubs. If you get paid weekly, need 4. And your last 2 years W-2 of the same job or within the same field. If you're self-employed, they'll need at least 2 years tax returns. And they'll need, most likely, if you're self-employed, a P&L, profit and loss, and a CPA letter showing that your business is still active. Now, there's different forms of qualifying for traditional loan, but I'm not going to bore you with all the exceptions. But those are the common forms for someone purchasing a home.
I wanted to add a few things because I had a client the other day, had a part-time job, wanted to add it, but you have to have that part-time job for 2 years consecutively to include that income. So let's say you're working 20 hours somewhere, you only been there a year. Even if you're making like, $50 an hour, you want to include that in your income. They're not going to include that because you haven't been there for at least 2 years. People that are business owners, if you write off everything, I mean, are they going off of gross revenue or are they looking at your profits then?
Well, let's back up 1 second. If you're W-2 or self-employed and you're providing all that documentation, you're considered a full doc mortgage, meaning that you're checking all the boxes necessary to verify your income. That's first off. That's why I started with either W-2 or self-employed.
Well, the question I asked, let's say you're self-employed.
It's a segue.
And you're looking at...
That's why, since we gave both products, I want to give them both. Now, what Joe was saying is like, how do they calculate that income? So when you're W-2, they look at the gross income. The reason they look at the gross income is because they don't look at the net because they know Uncle Sam already took his cut. Now, if you're self-employed, they're going to look your gross minus the expenses because now they see what you take home. So they're going to look at if depending on what you do, if you do Uber as self-employed, do you write off gases? Do you write off maintenance on the car? Let's say you're a landscaper and you're self-employed. Do you write off your trucks, things of that nature? And they look at the net. Now, there's things, the trick to, if you want to say self-employed, you have depreciation you could add back. But once again, I don't want to get too detailed on guidelines since I don't know what state you guys are you're on from, and I know there's certain compliance issues with the banking department. So I don't want to start talking about primary homes, guidelines, or exceptions, or what's allowed. Just in case you're from a state that we're not supposed to be talking about it based on licensing issues. So I just, once again, I'm just talking generalization, nothing specific. That's why guidelines, we don't quote rates. We don't say guarantee. And most likely, depending on the state, you should always deal with a licensed professional and ask those specific documents. So I'm talking about generalized to the program. Let me be specific. I'm not talking to the client. I'm talking about the program, what documents are required.
So now let me ask you mortgage gurus this. What are the benefits of going full doc? Like I know that no one really wants to give you all the documents. A lot of these people don't even have the documents like handy. What is the benefit, the true benefits of going full doc on, I guess, like with a traditional lending profile? Like why would anybody want to go full doc?
Well, if you're gonna live in the house and it's owner occupied, you have to go full doc. So that's really where it comes into play. If it's an investment property, you're getting a DSCR loan or whatever. But yeah,
let me interject. This is the reason why I say we talk about product, not specific. Joe is not wrong. He's just misspoke slightly. A full doc product is providing all documentations. So that means you have people, like I said, that provide pay stubs and W-2s, and then people that provide tax returns. But there's also something called alt docs, where this could be a primary home, but you can qualify with 12 months of business statements if you own a business or self-employed. You could also alt doc, which is not full doc for a primary home. So let's say you own a business. As long as you have a CPA letter saying you're self-employed, you have a P&L, and you at least have 2 months worth of bank statements that show the kind of deposits you say you make, that you qualify also. So I'm just making a slight correction. So a primary home does not mean you have to go full doc. Once again, this conversation is talking about product. We're not giving financial advice. We're not speaking to anyone specific. Please consult with a licensed mortgage professional, broker, or banker in your state.
Well, I was saying that because Daryl said, what's the benefit of going full doc? Most of the time, nobody really wants to go full doc.
Yeah.
If you're a W-2 worker and it's your primary, you don't have a P&L. You have a W-2 in taxes, so you're going to have to go full doc.
Well, also, too, can I add to that?
Yes.
So I guess to elaborate on Daryl's question is the rate is better, right? Rate is better if you're going full doc. More paperwork you can show, more proof that you can show, whether it's income, whether it's assets. Your rate's going to be much better than if you do alternative or you do alt, right? An alternative program or a non-QM program. Whether it's a primary, whether it's an investment. Just keep in mind, full doc means better program, longer terms, lower down payment, better interest rate.
Hold on really
The
quick.
number one catalyst is risk factor.
Yeah. So hold on really quick, because this we definitely have to clip. This is definitely a clip right here. So Jose, what you're telling me right now is the more documents that you provide, like if the underwriter can assess your entire situation and not really have to guess, the majority of the time that's going to lead to longer terms, better rates, and just better programs. Am I correct?
That's correct. It's like Stanley said. It's all about a risk factor.
I disagree. A 30-year conventional loan right now is like 6.16%. We're getting 30-year DSCR loans for 6.25%. That's pretty similar. It's not like the rate is much better.
Well, don't make me jump on Jose's side.
Sit to your room.
Am I lying about the?
Well,
the
you have
DSR?
you have to look at everything as a whole, Joe.
Right.
The rates are competitive because of the relationships that we have on the DSCR side.
For our
But,
DSCR.
hold on, hold
not
on. But
everyone
now,
else.
let's say the rate is the same. The down payment is different, right? And then also too, keep in mind that a DSCR, you cannot have that as a primary residence. But let's assume that you could. You have to put down a minimum. Let's say bare minimum, 10%. That's assuming that they have an 800 credit score, 720 plus credit score. When you go full doc, if it's a primary, was FHA or conventional, the minimum is what, 3.5%?
So the benefit, you can't say the rates are like the
Well,
benefit
it-
is the down payment.
You actually can. Okay, let's just backtrack for a second, right? Now you're talking about our DSCR program, which is aggressively competitive, right? And you ask someone, and that's an investment property. So I'll put two different products, apple to orange, against each other for 2 seconds, and you're gonna go, "Oh, our rates are better," but there's different caveats to it. Most likely in your state, there's a HUD program that will give you down payment assistance, that will give you money for your down payment, your closing costs, and if you need repairs, we'll give it to you. And a lot of these states, once again, ask your agents, if you live in a primary home and you live for 5-10 years in that neighborhood, they'll forgive the down payment. Number two, with an FHA loan, which has the cheapest rates in the market, only reason those rates are that cheap is because that mortgage is insured by the federal government. So let me give you an example. The government goes to the mortgage company saying, you know what? This person checked my box, give them a loan. I'm good with it. If that person defaults, like insurance, you put in a claim and I'll give you money towards that claim. That's the reason you're getting a lower payment, because the risk factor is dropped for the bank, because the HUD and FHA is coming in as insurance. There's no product, to my knowledge, on the investment side that comes with mortgage insurance that's backed by the federal government. And understanding of it. Especially back in 2008, it changed because there was a lot of companies that provided private mortgage insurance. But private companies could also become insolvent, run out of money, and have issues. Nobody at the FHA is running out of money when they print the money. Recently, President Trump, no matter if you like him or don't, he said that we're going to start buying the mortgage bonds, buying bonds to lower the rate. So that means those mortgages that get packaged and put back in the market, the government is telling you invest in them because we're going to buy it. That doesn't happen on private money. So that's why they go, you know what? Someone's been working. Most jobs have a probation period of 6 months to 2 years. That's why they ask for 2 years of employment. Because statistically, if you're going to quit your job or something happens, it's going to happen in 2 years. So they feel comfortable extending that American dream to Americans for 30 years. Investors, let's say I default. That bank holds that money. That money's locked in that property until they foreclose or sell it. There's no insurance company that's going to come give a private lender a check for it. That's why it's a higher risk product. They are mainly asset-based lenders because they're lending mainly on the asset. If it's DSCR, the revenue the asset brings in, it's a fix and flip, the potential value of the asset when it's sold. So, and I just want to make that clear because we're talking about two completely different products
they're very
that have
different.
two completely different mechanisms, and some things people see from the front of the benefit of it, but they don't understand the mechanism behind it. So understand something. If you can get a primary, definitely go for it. There's programs like FHA with 3.5% down. You have a NACA program where it's 100% financing on a home, where a lot of people have been preaching the hack. Like in New York, you get a NACA program, a 4-family. You get that for a year. Guess what? You can go get it. You could leave that after a year as your primary, then buy a 3-family under FHA. So think about it. You already started creating your investment portfolio with 100% financing, only required to live there for 1 year. Then the second one, you go FHA, put 3.5% down. And if you get an aggressive seller, they can give up to 6% towards your closing costs. So that means you could enter a home with only 3.5% down. Then you could go to a 2-family. Mind you, you're getting revenue from 4 apartments from the first property, 3 apartments from the second one, and now you're in a 2-family where now you have a tenant paying rent in that one also. And then you can go and leave there after a year and be in your forever home while you let the government with NACA guaranteed, FHA, and then a conventional all provide you revenue for your investment portfolio. So understand something. There's mechanisms. If you know how to use them, you could even use primary home mortgages to help create your investment portfolio. But it all depends on the strategy you take and use.
Wow.
I
gotta take notes.
Yeah, Stanley, that was amazing. I want to pick your brain about just one more thing before Jose and I jump into the business side of full doc versus limited doc. Stanley, so let's just say I'm self-employed. Me and my partner are looking to buy a home. Let's just say my partner is a nurse. She's W-2, right? I'm 1099, right? How do we go about getting, I guess, like a traditional or like a full doc mortgage? Because me, myself, I mean, I'm not going to have I'm not going to have W-2s and stuff like that. Are we able to go FHA? Like if I just have like my income from the business and whatever I pay myself versus her, that's W-2. Like, is it not one or the other, or can we combine both?
Good question.
Do you want to talk the average person, or do you want to be at that level in this conversation?
No, I want to put the average, bro. Not what we're going to put
understand
together.
what I'm saying.
Yeah, not what we're going to put together.
And I like the fact that the way you put it is because
Keep in mind, he's asking for a friend.
It's not in the sense of being superhuman. Because if you're like, let's build something, you don't go on a loan together. Let her get the NACA loan for herself. Because remember, you have to use her W-2 income, then the income of the other 3 units to qualify.
So that
Now you go and get your own 4 unit, file your taxes accordingly, because now you don't have to show as much. Because remember, you have the other 3 units. So now you and your significant other just acquired a 8-unit rental portfolio. You both stay a year and you do it and double down. That last
Man, you got to charge for giving all this info.
sign up for Broker's Connection. You know what I mean?
And you work your way down. So
Gotcha.
It doesn't mean, and I have people that do that. They're like, hold on. Yeah, I lived there for a year and then we just keep building. By the time you're done, you have a 4-unit, a 3-unit, a 2-unit, a 1-unit. So each of you, now you're combining a 20-unit rental portfolio. Now, let's say you want to live in $1 million house. It costs you zero because the revenue from all those units are covering your lifestyle.
Yeah.
And depending on how much revenue those units bring in, you could retire.
And just have the money flowing.
It's a revenue stream. And I know people, my close network of friends that do that now. One husband works for the city right now. The wife works for a school district, and they did that. And they're like, oh, my paychecks go for my lifestyle of what I want to do. The houses are paid for, the kids' sports are paid for. That covers everything. So my money, when I fully invest in my 401ks with my personal income, because people put 5-10%. They're like, let me invest the max.
Yeah.
It's sitting there. Let me invest my max. It's not like I have another bill to cover.
Yeah.
So it once again, those are vehicles just like anything. It all depends on who's driving it and where they're planning to go with it.
Gotcha.
Once again, that's not for everyone. Some people get a primary. They're good. They work their job. They're not into building it. I'm just giving you a different approach to using vehicles that people don't always realize their true capabilities.
Gotcha. And you know what? That's why, again, real estate is something, and definitely, I think before the end of this year, I'm definitely gonna jump in, to the whole real estate aspect of, just building like another revenue stream, because, I think they did a poll like last year or something where they said that there's really not many Americans that are millionaires without having a real estate portfolio. You know what I mean? Like, this is something that everybody, if you want to be a millionaire, you're gonna have to learn this stuff. You know what I mean? And I'm actually blessed to be able to work with you three gentlemen that are mortgage and real estate gurus that I can go ahead and actually prepare myself for, taking that next step. You know what I mean? And that's awesome. But Jose, I don't want to listen. Yeah, I know we have business funding people that are looking at this as well. I know Stanley's giving the keys to the car for the mortgage stuff. But let's touch on the business funding side of things. So Jose, you specialize in traditional lending. Now on the mortgage side, you guys said that more paperwork, more documents that you can show, better rates, better terms. Is that the same on the business side, or is it different?
No, same thing. If you're going traditional, you have to show 2 years business tax returns, 2 years personal tax returns, profit and loss statement, balance sheet, 4 months of bank statements, that cash flow. Your credit score must be 700 plus. We try to go ahead and skate away with 680, but 700 plus. And that's going to get you traditional programs, which is anywhere between 5 to 7 year terms, monthly payments, interest rates ranging, I would say, I've seen them as low as 9.5%, all the way up to 10%, 11% APR. Now, that's definitely something that a lot of business owners, want to take advantage of. However, tax returns for a lot, I would say about 80% of the clients that I speak to on a day-to-day have tax returns where they are showing a loss, right? Especially if you're a new business, 2 years, 3 years in business, you are showing a loss and are unable to qualify for something traditional unless you can add back certain items. But majority of the time, that's not the case. They're unable to, but that's why we have alternative programs. Right. But on the traditional side, definitely a lot of paperwork. You have to be a perfect client. You have to, even if you go to your local bank or the bank that you currently bank with, you have to have a relationship with them. But they already know your financial status. They already know how many negative days your account has had. They know how much money comes into the account. If you can cash flow, if you can afford, if they give you a monthly payment, let's say $10,000. And on average, when you do go full doc, they're only giving you 20% of your gross annual sales. So that means that if you do, let's say, $1 million in revenue, you're showing a profit, they're only going to approve you for 20% of that $1 million, which is a maximum of $200,000. So that's the maximum dollar amount they would approve you for. Now, to determine the exact number is going to be contingent on can you afford, affordability. Can you afford the loan, and what is the payment that you can afford? So that definitely is, it's tricky when you're looking for business funding. You have to know where you are positioned, right? What's your credit score? What documentation do you have? How long have you been in business? Because even for a full doc file, you have to be in business for 2 years. And then also too, if you have a business credit, right? Where does your business fall into it? If you have business credit cards, are you over leveraged? There's a certain utilization, even on the business side, that you have to maintain. On average, anywhere between 25 to 30% overall business utilization. And also, too, on your personal side, you have to have about 25 to 30% personal credit overall utilization, right? With no latenesses, no derogatories, no bankruptcies. If there is a bankruptcy, banks want to make sure that it's been 7 years before they go ahead and approve you, majority of the case. Some banks, I've seen them go back 30 years. But it all just depends on the program that you are qualifying for or looking to get qualified for.
Now, Jose, does that mean that if somebody is showing a loss on their most recent tax return, that excludes them from all traditional banking products or just some?
Good question. It doesn't exclude them from all, right? And it just means that now the whether it's the term, whether it's rate, it's going to change, or even the approval amount. Because there's certain bank relationships or there's certain programs that allow you to get up to $50,000, some of them $100,000, where you don't have to show, let's say, bank statements. You only have to show tax returns. Or let's say, there's other programs that you only have to show bank statements, but no tax returns, right? So there's a lot of different things, a lot of different programs that banks offer. There's also another program where, let's say you're liquid, you have a lot of money in the account. You put money into an account, they give you anywhere between, I would say about 10% of whatever it is that you have in that account. They make you open up a CD account, right? And they'll go ahead and give you a business loan up to 10% of that amount, right? So there's a lot of different programs available. It all depends on one of the biggest things you have to make sure that you understand, and we say this here all the time, what are you going to use the money for? What's the purpose of the capital? Is there a return on the investment? Because if you do fall short of the traditional side, there are alternative programs or private money programs.
Yes, right? and that's what that's what I'm always excited to talk about. Private money lending, right? Because we know the majority of the people that we all speak to on a daily basis don't qualify for traditional. The majority. Everybody wants it, not everybody gets it, right? So we need to have alternatives because again, when you sign up with Brokers Connection, when you're doing business with LendMate Capital or Fund Rock Capital, we don't want to deny anybody. Denying someone when we have 15 different programs is something that we never want to do. But the reason why we're able to go ahead and speak very confidently is because we don't just have traditional lending products.
No.
We have those alt products. We have those private money lenders that really will accept the story more so than just giving you an approval that the algorithm spits out. Correct. These guys will tell you all day, I'm always calling lenders trying to sell a deal, if it makes sense and within reason, and as long as the deal fits the parameters of certain lenders' box, right? It's all about being able to maneuver the landscape and be able to go ahead and honestly be the best broker that you possibly could be and bridge the gap between what you really think the person qualifies for and that private lender's box. So let's flip it back to you mortgage guys. Now, when someone says private money, right? Like we're not going to go FHA, we're not going to do anything like that. On the private lending side, when it comes to mortgages or real estate, who really uses those like that private money?
I feel like the term. I mean, some people say private money, some people say hard money.
Yeah.
I mean, sometimes it's a bank, sometimes it's a lender that built a team around. It might be like 1 or 2 people sometimes, but there's a lot of different programs available, and each lender has their own specialty. Like some people like to do 1 to 4 units, and that's their wheelhouse. They'll get you the best terms on 1 to 4 units, but they won't do 5 or anything higher than that. Some won't do fix and flip, some won't do ground up construction, but some are specialized in ground up construction. Like everyone has their own specialty. Some people only do 680 and up, while we have lenders where we know if the credit's bad, they could do 50 LTV and they could find a way to make it work for the client. So there's just a lot of variety and a lot of different ways to get a deal done when it comes to private money, because it's just a unique field. It's ever changing as well. So
now, Joe, would you say, because I know you've done probably close to a thousand deals in your whole entire time doing mortgage and real estate. Would you? Is it easier to get private money deals done or hard money deals done as opposed to full doc and traditional lending? Like, is it a certain caveat in which you would prefer to do private lending? Do you get paid more on private lending? What would you prefer?
I feel like each scenario is different. Each lender is different. Each client's different. Each property is different. That's one of the reasons why I love what I do, because nothing is ever the same. Every day is completely different. Every client's situation is going to be completely different. Me personally, I like the private money lending. I like dealing with investors because, they're going to have more deals. Most Americans, if they're buying a primary, they're happy. They're good. They're not real estate investors. They're doctors, they're lawyers, they're teachers, construction workers. It's not their field, but I love that I've developed the skill. Like, I started out doing FHA and conventional loans, years ago, but I'm really excited every day doing what I do.
Now, Stanley, I wanna ask you the same question, but with just a little bit of a different caveat, right? Is it true though, Stanley, that with private money, right, that the overall deal matters more than the client's credit score or the investor's credit score? Is that true? Like, if the lender likes that particular deal, will they have more? Are they more inclined to fund it, regardless of credit score?
It goes back to what Joe said. You got to remember the term private money. So it all goes down to where the source is on their criteria. So it's private, just like someone, you could go, you know what, I like the building, but I don't want to fund it. Why? Because it's not green. No one can tell you have to fund it. No one can say, I checked these boxes, you have to lend. You're like, no, I saw it as green, don't want to lend. Next deal, done. Mm-hmm. With traditional, as long as I provide these documents, my debt to income is this, my credit worthiness is this, I'm told per your guidelines, I get the loan.
Yeah, FHA and conventional guidelines, they are the guidelines.
Yeah.
You know what your max DTI ratio is, front
Correct.
and back.
And if you do deny me, you could line the bank up for a lawsuit saying you discriminated against me for stuff that didn't fall in the guideline. So if you've ever taken, which I'm just going out there, your banking license for mortgages, a lot of it is talked about the way people were discriminated against from buying homes and what you can't say to someone. So, for example, if I'm sitting with you at a desk and I'm like, oh, let's say, for example, you're looking to rent a 1-bedroom and a woman's pregnant. I can't go to a lady saying, oh, do you think maybe this apartment won't fit you because you look like you're about to have another kid?
Yeah. You can't say, oh, maybe you're going to miss work. You're going to have, leave. You got to take care of these.
Yeah. There's so many different things you can't even say as a licensed mortgage guy because does that person fit that box? You can't add a box.
Yeah.
Yeah.
A lot of compliance.
Correct.
Yeah. A lot of guidelines, compliance.
If you look history-wise, there's something called redlining where realtors would take a client and gear them towards a neighborhood that for their people or to keep them out of a certain neighborhood, even if they qualify for the homes in that neighborhood. Now, the difference with private is almost like you're going to a family member. You catch them on that day, you make them believe it's a good investment. No one can tell them they can't cut a check. Or you could come saying, this is a great investment. Look at the revenue I'm creating. Look at the potential. And today I'm just like, I don't feel like giving money for that today. And no one can tell you anything. But you still can't discriminate. Do not let me just clear.
Yeah, because I was just like, because I was just like, damn. All right, so if that pregnant lady is about to get a 1-bedroom in this private one, I'm like, listen, you about to go and leave soon? Just discriminate? Like, is that cool?
Especially during Black History Month, we got to make sure no discrimination.
Shout out.
Solid. But it once again, you can't say I'm not gonna.
Jose went like this. He didn't do the fist. Jose was like, "We almost got you, bro. We almost got you."
He didn't know who was watching.
He didn't know what to do. Yeah,
it's cold as ice.
No. But seriously. So, like, if you have a client that has like a time sensitive deadline, right? Would you kind of try to push them more towards private lending because you know how to navigate the landscape a little bit more than like just boom, if you don't fit this box, like the deal's done? Would you push that person, like sometimes the time sensitive deal, would you push them more towards private lending where you can move and shake and like navigate the landscape and kind of get the deal done?
Once again, it comes down to what the person's goal is and their strategy. So for example, let's say I can't go traditional with them right now, but they're like, hold on, if you give me, I don't have 2 years of my job right now. Mind you, let me back up. A lot on the primary end of it, there's not a lot of private lenders to begin with, right? But I'm just going to entertain the scenario. My credit's not where it should be. I don't want to jump in a 30-year loan at this rate. Or I don't have 2 years employment at my job yet, but I really want this home. There's a private lender that's not going to require me to be employed for 2 years, but they'll give me a short-term 12-month loan. I might go, okay, you put enough down, which I'm not letting you put down 3.5%, but let's say you put down 40%, 50%. I can go, okay, I'd lend on that because even if I have to foreclose, I'm still in the green. Because if you stop making payments, let's say in New York it takes 4 or 5 years to foreclose. By the time I foreclose and get possession, I'm still going to be up ahead $120,000.
4 or 5 years.
In New York, the games that can be played with foreclosure get crazy, ladies and gentlemen.
Crazy.
And not even understand something. New York was backed up prior to COVID.
Yeah.
Right? And think about the backlog that was created due to COVID. Those same judges that are handling foreclosures are also still handling evictions when it comes to those markets. So, and then you have the person that plays the game, right? They're a tenant. And then they know they're about to get evicted. And guess what? All of a sudden someone else moves into that apartment. So now when you file that original eviction paperwork and your attorney used that person's name, guess what? I live here now. I never got eviction.
Surprise.
It could be as simple.
I never even heard of that one.
What? You haven't been to the boroughs. It's as simple as me moving in, me getting mail delivered, and putting utilities on in my name.
That's it?
I have a vested interest in this property.
Yeah, you can't. They can't get you out for a minute if you just.
New York has
You
changed.
can pay one bill. You're good.
New York has changed a lot of rules within the past 12 months, limiting squatters' rights, but you gotta have to catch it.
Rights and routes.
Yeah, see,
Yeah, for real.
subliminal.
You're forgetting one major thing.
Hi,
Give it
Albert.
to me.
What's happening, guys?
What up,
You're
what up?
forgetting
Albert.
Mamdani came into the picture now.
Oh.
We gotta put Albert on the stop clock.
Yeah.
We gotta put him on a stopwatch.
All right, so getting back to, but you know what? But private money necessarily is not a bad thing, right? One thing about private money that does happen is it opens up a lot more doors,
100%.
right? And it opens up a lot more doors for programs. I mean, Stanley and I were at a conference where now we were sitting down with hedge funds, right? And they were giving us access to money because of the number of deals that we bring in. Now,
Correct.
yes, you did mention guidelines. But it just means that now the guidelines change, but for different types of programs, right? Because you're not getting, or at least I don't know, and Stanley, please correct me if I'm wrong, I'm not getting an FHA loan for a fix and flip,
No.
right? I'm not getting.
Oh no.
Was
Let
it
me no
203K?
203K.
203K. Oh no. Okay, let me change that. Fix and flip investment property,
No, you're not getting
right?
that.
So that's one. On a DSCR loan, I mean, or even let's just stick in a fix and flips. Right, you can get through private money. You don't have to have for certain programs, or at least with us, you don't have to have experience, right? And there's some times you don't have to. We deal with first time investors, no experience needed. We can even go, depending on the state, no credit score requirement, right? So it's strictly based on the asset. So private money on the real estate side, I think, is more asset based. Looking at the property majority of the time.
Yeah. Your
Does
credit-
it mean that your credit doesn't play a
yeah,
role?
your
I think
credit will play a
Economics
role.
it plays a role.
Better credit, you can have better rate. Less reserves needed at close. You don't need to show as much, so it's always going to be better.
Private money, no matter if it's real estate or business lending, it's two things happen. What do you need the money for? What is your story? So on the private end, they go, okay, why do you need a 12-month loan? Why aren't you taking a 30? If you're such in a tight situation, why don't you just sell the property?
Right.
So there has to be a story on my end.
It's got to make
And
sense.
from my understanding from listening to Daryl, one of the key things they say is, what do you need the money for? Because if you're just like, I want to show $100,000 in my bank, that's not a real purpose. That's not why you need the money for. Because I was speaking to a mortgage client today, actually, today or yesterday, and we're having a conversation. Jose's sitting a couple feet away from me, and I was presenting a second lien mortgage program that's a hybrid. It's a private lending, but it's a hybrid between a business loan and a mortgage. And the guy, when I said, what do you need the money for? He said, I need the money so I could get in other investments and fix and flip. Now, this program had an APR of 14.99% and 10 points, right? The guy didn't bat an eye. Why? Because he knew by releasing that equity from the property and reinvesting it, having the opportunity to invest in another property, he 10x that money where that 14.99% and 10% was his pocket change. So that's why. But if he said he was taking this loan just to go to Tahiti, go to DR, go to buy a Bentley, it would be a dumb situation. There would be no point of it. But he was taking that money to make money. But more importantly, the money he was going to make would actually, the opportunities he was jumping into would make that cost of money mean nothing because the opportunity would be better. And from listening to Daryl and Jose at times on the phone, that's the only reason they get on the phone. It's not because of the money. It's never because of the money they're getting you. It's based on what that money will unlock for your business. That is the upside.
And you know what, Stanley? I think that is the reason why I love the private money sector, which is revenue-based funding or MCAs, right? Because the phone call, and I know, you know, again, we're not going to keep repeating the same thing, but like, what do you need the money for? Like, sometimes you have to,
hold on. But you let me not to, but you do have to say that again because that's the anchor of it. Why take the money if you don't know what you're going to use it for?
Don't deals die because clients will say something like,
you shouldn't shy away from it.
Well, there's a reason why, right?
Okay, I'm listening.
Let's just say a submission comes in and somebody's not applying anywhere else. He's just fresh off the street. He's like, hey, buddy, we need 10K, right? But now let's just say we have a referral comes in, like we have to super broker a deal, and somebody's like, hey, listen, I have a 10K approval.
Hold on. Can you explain what a super broker is?
Yes, super broker is, let's just say we're on with a lot more lenders than another shop is. And they're like, hey, Daryl, listen, I can't get this deal done. I need you to try to submit it to your lenders and see if we can get an approval with you guys. Okay. Now, let's just say Stanley is looking to borrow money. Stanley submits his file to Joe and to Jose. Jose gets Stanley approved for 10K. Joe, with his lenders, he can only get 5. Now, Joe's like, hey, Daryl, listen, you submit it to your lenders, see if we can get more money. Now, in a situation like that, I don't care why Joe needs them. I don't care why you need the money, Stanley. My job is to get Joe the best approval. That's why I'm saying that. You know what I'm saying? So, yes, we want to know what the client's using the money for, but sometimes the deal's in such heavy competition, you just have to beat the other person, right? So, that's why I like our private money. That's why I like the MCA industry, because sometimes you just got to get down and dirty and just beat the other shop. You know what I mean? And it's all about your relationship. But you have to, the client's got to have some mitigating factors to give you to win the deal or to sell the deal to the lender. For instance, we have some lenders that will fund you with one bank statement. Well, there's only 2 lenders that'll fund you 1 month of business, 1 bank statement. But they can't.
What?
I didn't really.
Oh, yes.
I didn't even know that program.
Yeah. Oh, well, it's not a different program. It's just certain lenders.
Okay.
So again, all this money's
elaborate on that program because like I said,
no.
I never hear about it.
It's an MCA.
1 month and one statement. So if you got one really good month. The other 3 were not so.
No, that's not what he said.
Okay.
Just start.
That's not what he said.
Okay, so you just started. Start up 1 month.
We are 1 month in business, and you have 1 month, and you need money because your business is growing.
Yes, we can get you funded with a revenue-based deal, but those particular lenders, one of them caps out at 10K, one of them caps out at 15K. Like, they're not, even if you're 1 month in business, you did $1 million, 15K cap out.
Okay.
You understand what I'm saying? But it's about navigating the landscape and being able to sign up with these particular different lenders. That's why we have lenders across A paper through D paper. And then after D paper comes high risk. Even if you defaulted and you busted out on all your advances before, even if you're in debt settlement, even if right now currently you're bouncing payments on your current MCAs. We have investors that'll say he has the revenue, it's worth a shot. They'll
Hold on. So the guy's currently not paying the MCA lender he has.
Correct.
Now, but in the same breath, you said the guy has revenue. I'll take a chance. How are both still true?
Well, what do you mean?
Give me the scenario how someone's not paying someone because they automatically debit it, but you're like, oh, he has revenue though.
No,
Might have
okay.
to be-
No, got you. Ready? Stop payment. I don't want to pay you anymore. All the money's in my bank account, bro. I'm still getting paid from my.
I know that's a question I would ask if I was on that side of the screen.
No, listen.
Listen,
I'm like, you got revenue, but I can't get none of money.
Yeah, no.
Same thing. They're taking it out daily or weekly. So
Yeah.
I didn't know there's an option like stop payment. I didn't know.
No, what? If I'm banking with Chase, hey, listen, Chase. Listen, let me capital point from my account. Yeah, stop that.
Wow.
They're gonna do it.
Yeah, you got a point.
You understand what I'm saying?
Right.
Now, again, the odds of getting that person approved, listen, is definitely slim. But there are investors out there that'll give that guy a 10-day deal.
A 10-day deal.
Well, hold on, but now you got to keep in mind, see, because that's the reaction that everyone gives.
Yeah, get him, Jose.
So do the people, the
I think he's just
brokers.
curious, though.
No, the affiliates that submit deal, like, oh my God, a 10-day deal, but he deserves better because he has this. You're trying to get back into the good graces of people lending you money.
Start a program.
Why did you, correct. So that's one of the things that a lot of, whether you're a broker, whether you're the sales representative, or whether you're the client, understand that you defaulted on someone. Someone's giving you a chance. They're giving you a starter program to get back into it, right? Let's talk about this. Why did you default? Why did you think the client? Why did you think that it's a responsible business owner? You should stop not paying someone. What makes that okay? But now someone is willing to take another chance on you, even though you may default on someone because you already have a history of doing so, right? Why would you think that you won't get a starter program or you deserve a program as someone that never defaulted or someone that has a high credit score? Or let's take it a step further. Why do you, if you have a low credit score, 500 credit score, why do you think that you deserve monthly? And I say deserve because think about it. You have a 500 credit score. I can clearly tell you that that probably means that you defaulted on some credit cards, term loans, maybe personal loans that were monthly. You couldn't handle it. Why do you expect someone that's a program that's unsecured, doesn't pop up on your personal credit, does not reflect anywhere else unless they follow UCC lien, which they don't unless you default? Why do you feel, and I want to say the word entitled.
Just say it, Jose.
Entitled. Why do you think we feel entitled to get a monthly payment? No.
Valid point.
I want you, I'm willing to give you the money, but you're high risk. I want to collect the money as quickly as possible because you already defaulted on monthly payments. You're showing a history that you can't handle monthly payments. So let me give you this money. I'd rather collect a little bit of something every single day than expect and cross my fingers to hope that you can go ahead and make a monthly payment, a big lump sum payment at the end of the month. Maybe sometimes they even look at your daily balances, or you as the business owner, look at your daily balances.
I have to pause. So when you start talking MCA, this is about to take an hour. I'm telling you, once he said something like, you deserve more, you see the Rock eyebrow goes up.
Yeah.
You just know, like I'm on the
magic words.
yeah, and I was just already on the timer, like, oh my God, Jose's about to go in.
Well, the reason
we're still gonna stay on it. I just want a question about
At least
that.
you have a timer. Jose's about to
I'm like,
go
what
in.
the hell?
Question.
So my question, can you give us a scenario? Because like I said, we're new to this, and I want to be awake, not asleep as you go 10 minutes. Is in what scenario? I understand it's the starter program, so let's say 10 days, right?
Yep.
Have you guys experienced someone take that and like, because we always talk about the what do you need the money for, right? And 10 days, it seems like a slim period. Is it just so they have that time to pay it back? Is it 10 days because they need to pay a vendor and they get the money in 3 days? Like, what scenario would someone say yes?
Yo, I
to
got
10 days.
I got you, bro. And you know what? You're new to this, but I'm about to make you true. I'm about to make you true to this.
Oh my God.
I'm about to make you true to this, bro. Okay?
It's for educational
No, facts. I'm gonna give you the sickest scenario.
I'm
ready.
listening.
I'm a construction guy.
Okay.
I took $50,000 over 12 months to pay back my MCA. $50,000 over 12 months. My weekly payments are $1,500 a week, right?
Okay.
I took this deal in the summertime when I'm busy. Now I'm a landscaper in New York. those $1,500 a week payments are still going through the wintertime. Nobody's fucking cutting grass right now, right? So now that $1,500 is looking real, you know? Now all of a sudden I have to call the lender and I have to cut my payments in. Maybe I can't afford $1,500. Maybe right now I cut it down to $500 a week, right? There's lenders out there that are going to see that and say, no way we're going to fund you. You can't make the payments right now. Why the hell would I come in and fund you? However, there's other lenders out there that will be like, we know nobody's going to give them money. We also know that spring is coming and they're going to start making revenue. Let me give this guy a super high risk deal. I'm going to bet that this guy's going to make these payments. Okay. And knowing that I'm the only person that's going to give them money right now, depending, and they're going to ask you for a lot of docs. They're going to ask you for AR. They're going to, trust me, these high risk guys are not just going to fund you and lose their money. No, they're going to ask you for a lot more documents to try to make sure that if they're going to take a risk on the business, that they're going to get their money back in some way, shape, or form. Or they're going to bet that you're going to default. They're going to add on a bunch of fees, take you to court, and win, and just get all the money back. Or get double their money back.
So
right?
how much are they lending in 10 days? Like, if this person just cut their payment from $1,500 to $500, like, what do you feel?
He's saying the business is ramping up. That's why they're going to give it, so someone neast to make payroll.
10 days?
No,
How much are they going to make?
That's what shocked me, too.
Yeah. Listen, again, guys, it's rare that somebody's going to accept a 10-day deal, but 10-day deals are presented. And remember, Jose, we're on with the lender that I just told you. There's a particular lender, right, that I just actually got the deal funded 2 days ago, right? Guy got approved.
Congrats.
The guy got approved. Thank you. Guy got approved for $5,000, right? The fees associated with the deal after. So
I heard you guys talking about it. Like, what the hell?
No. This. No, okay. No, the guy thought it was $5,000, but the approval that Jose got, he got $2,000, right? The factor rate or the cost of money was a 1.899.
Yeah.
The upfront.
That's the start.
The upfront fees that the guy had to pay was $900. So out of the $2,000,
You got to pay back like
out of the $2,000.
$4,000, $4,500 in 10 days.
Out of the $2,000, the guy had to pay back $4,500 in 19 days. Okay, he was only going to net $1,100. They said that next week they were going to charge him $495 as an admin fee. So that $1,100 that he was netting already is only like $600.
It was up to their discretion.
Yeah, and then no, that was another fee. And then they said in 10 days after that, up to their discretion, they were going to charge him another $995. Okay.
Yeah,
So what's the benefit for the
I
client?
talking about it. I was like, what?
Listen. The guy sent driver's license for the check. We order contracts. Now we're going to try to fund that deal tomorrow. But again, that deal did not make sense to us. But guess who it fucking made sense to?
The client?
The goddamn guy borrowing the money.
So he can buy groceries.
Who knows? But again, it's a starter program. He was declined by everybody else.
But keep in mind, so this particular lender doesn't decline anyone. They're like, listen, we're going to put out an approval regardless. It's not going to be a good approval, but we'll put out an approval. That's what they're known for.
He probably owes someone $500.
No,
like
not even that. Also, keep in mind a little bit more to the backstory was that the client had a 3 or 4 positions already, 3 or 4 cash advances. Remember that the way the approval is generated is through their algorithm, right? Which means that they take it's called a specified percentage of their daily balances, but they have to subtract whatever other debits are coming out of it, whether it's daily or weekly. So based on their calculator, the client qualified for something, and their minimum loan amount is $2,000. Now, is it the right program? Just like Daryl said, and I say this all the time, is like, listen, it's not up to me. It's not my business. My job is just to present to you the approval, right? And whether and you're the one at the end of the day that makes the decision. I mean, I'm in no position to make the decision for you, nor should I, right? But look, this is what I got. This is based on your situation, your scenario. This is what everyone's coming back with. So either let's take a decline and we take a loss, or someone's willing to give you something. I mean, and no one's saying that it's the best deal available, right? Usually, keep in mind that the cheapest money is the money that you never got.
You didn't pay no interest on that, right?
Correct. And it just but also, and it depends on what you need the money for.
Always. That's what it always
keep
boils
that
down
in
to.
mind.
That's what I said before. So it's
Yeah.
the linchpin
Yeah.
of
The
not just
what?
It's the linchpin.
Can't use that word this month.
Yeah, Black History Month, bro. You cannot say LY nothing, bro.
Look at the Webster Dictionary. Linchpin is a different word.
All right.
But like I said, it's the foundation of private lending. It's lending for non-traditional lending. So it's what do you need the money for? What are you trying to do with it? You know what I mean? And then you figure it out. If someone's like, I want to make money, you're going private because you're going to see a house in Arkansas that you're going to buy for $10,000, put $20,000 in, and think yourself for $50,000. Chase Bank isn't doing it. Rocket Mortgage isn't doing it, but there's some bank out there that's going to go.
That
Here's
will
the money.
do it. Yep. And you know what? Just to, I guess, kind of button up the private lending segment, because I know we kind of went all over the place. But ladies and gentlemen, private lending is very exciting because somebody out there is gonna do the deal.
Yeah.
You know what I'm saying? Now, Jose's a firm believer in, listen, some deals you just can't get done. Don't waste your time on it, right? But if the deal is within the realm of you of understanding, and if it's within the realm of something that somebody's going to accept, well, somebody's going to do the deal. You know what I mean? And listen, again, who the hell am I to tell this guy that this $2,000 deal is a stupid deal? No one else was offering it to him. So maybe he needed to pay a contractor, just like Joe said. Maybe he needed to pay somebody $500 tomorrow, and he's gonna net 11.
He's like, I'm in danger.
I'm in danger, sitting on the bus and flaming. You know what I mean? Like again, if he needs it, we're gonna be the ones to fund them. We're gonna get the deal done. Again, we don't have to deny anybody. You know what I mean? That guy got denied from 17 companies. We got him 2 Gs. You know what I mean? So I mean, and let's just say he makes all the payments on time. He gets more money in 19 days. Now that $2,000, they say, okay, we're gonna give him a little more. He'll get 5. Now that 5 is 10, that 10 is 20, and now we can go ahead and get him to another lender. More people are willing to take risks. That's the beauty of a starter program. But you can't start if you're getting declined everywhere. You understand what I'm saying? So I guess that's more so why I like private money, is because somebody's going to take a risk on you. And trust me, if there's anybody out there that's going to be able to find someone to take a risk on you, it's going to be us. But we're gonna button up the episode. We're almost at 8 p.m. tonight, ladies and gentlemen. Joe, why don't you go ahead and give us your final thoughts to kind of button up the episode?
Yeah, working in private money compared to traditional, like Daryl was saying, it's very exciting. Like I would have never imagined. I went from pitching people 3% rates to now 14.99%, 11%. But the rate doesn't always matter. Sometimes it's the right time and the right place and the right property and the right opportunity for somebody. So, don't get so hung up on the numbers for all the other brokers out there, everyone in the community. A deal is a deal. You never know. Sometimes that 3% rate on a certain property isn't as lucrative to the client as maybe another deal with a higher rate. Like, it's all the scenario. Everything is random at times. It's really what type of deal, what position the client is in. And yeah, I would say just be as informed as possible, learn as many products as possible, because you could have so many solutions for so many different people and make yourself so valuable. That's it.
Awesome, Joe. And shout out to Albert. I was just super informative, the inside scoop that no one talks about. That's my man. Stanley, you want to kind of take us out?
When it comes to the mortgage end of it, I think there's 2 perspectives on mortgages. There's people that want to learn every program, learn every exception. If you're going to learn anything about mortgages, learn how to kill your own deal, right? If you get in the habit of learning how to kill a deal, you'll also know how to put it together, because you'll see the potholes and you'll know how to fix it. When I went through my experience of doing mortgages, majority of the time I'd meet someone and they're like, oh, well, I deal with someone now. I'm like, okay, great. Give me the deals you can't close. Give me those, not the ones that are perfect, fly by night, easy. Let me earn my relationship with you. Let me not take you for granted. And what would happen? Someone gave me a deal and I closed it. They're like, what? You closed that deal? You're the person that closed it? Yeah, I did. I go to the closing. I meet the buyer realtor, the seller's realtor, the attorney and title company. I never left without a referral. Because every party in that room knew how hard that deal took to close, and I'm the person that did it. And eventually, another person goes, "Oh, you were referred to me by so-and-so. You're known as that guy." If Stanley can't do it, no one can. But at the same time, you get compensated for it. But you have to take it that seriously. I can learn about traditional mortgages. I can learn about private money. I can learn about fix and flips and DSCR. But be the master of the products you present and not just the fluff. If you learn the exception to the rule, that will make you way more money than just the textbook stuff. That's my 2 cents.
Dude, Jose is over here tapping his foot. He's like, no, don't just send us problem files, dude. He's like, send us shit that's gonna fun, bro. Jose's over
file. One problem file.
Jose's over here like that. He's like, no, send us the shit that's gonna fun. Please don't send us shit. Don't send us new development in Alaska, bro. Please, we don't want
Rural areas.
Hey, I'm gonna close some rural deals.
I was young at that time.
Yo, this guy Jose is
I'm
crazy.
gonna go to the closing at the farm, man.
All right, Jose, take us
right.
out of here.
Yeah, well, listen, sticking to today's segment is traditional. You know, it's easy. It's Stanley's not wrong, right? But it's majority of the time, a lot of brokers I've seen get focused on traditional programs, right? And the reason why is because honestly, that's the easiest deal to sell or to present. It's not even a selling; it's to present. Don't become an order taker, right? Present the benefit. Understand why they need the money for. That's going to be very, very important. Why do they need the money for? Because if you can understand what they need the money for, you can go ahead and navigate different programs. Just because a client has an 800 score doesn't necessarily mean that they want a traditional program, because they may need the money to fund the project tomorrow. You're not getting money in 24 hours with a traditional program. You may have to go the alternative route, but you won't know what or how quickly the client needs the money or what they need the money for unless you ask. Ask all the questions. Don't be scared to ask the client the tough questions, and please don't assume the answers. Always ask the questions. What do you need the money for? How quickly do you need the funds? Along with your other qualifying questions. Traditional routes are not always the best routes for the client. Okay?
Like that, Jose. I like that. Chris, do you want to, I don't know what setting you're in, but do you want to unmute your mic and talk about the business fund deal that you submitted today? If not, if you just want to type it, it's totally fine. But other than that, I'm going to go ahead and get into, wait, hold on, Cheech. Let me, I'm going to go ahead and, button this up really quick. Chris
Chris is muted. That's why I don't know if he's trying to say.
Oh yeah, Chris, you unmute yourself if you want to chat, Chris, really quick, bud.
Or you can send the email at partners@lemmaycapital.com.
No, Daryl at lemmaycapital.com. I got you, bro. DARRELL at lemmaycapital.com, baby. I got you, bro. I got you. Okay, I just had an email. I'll type you my email in a second, brother. Let me take us out of here, all right? You can call me too. Got you. Listen, ladies and gentlemen, but listen, honestly, guys, thank you guys for tuning in again. Listen, we've been doing this on the camera thing right now about a year and almost like a year and a half. Like a year and 4 months. And we always want to bring you guys fresh topics. It's tough to stay fresh when, a lot of the stuff that we talk about on a daily basis does seem like it's repetitive. But I mean, if you can't regurgitate some of the stuff that we tell you as soon as we get off the camera, which probably 90% of you guys can't do, then you guys need to hear it again next week. And it's just keep hammering it home until you guys are able to go ahead and speak eloquently about some of these products without us on the phone, without you having to converse with us to speak about anything new. So just thank you guys for being here with us and still tuning in when you guys have a lot of other stuff to do. And we just want to bring you guys the content that we feel like is going to make you guys the most money. Without that.
Wait. Did Jose give his 2 cents?
He did.
No, I think he gave like 3, bro. We need to kind of cut him off real quick. All right, ladies and gentlemen, really quick. If you're waiting for the bank to believe in you, you're already behind. Capital favors speed, clarity, and execution. Money doesn't reward patience; it rewards preparedness. And again, ladies and gentlemen, if you operate with the fact and the notion that you want to be an expert at your craft, you can even tell your clients we're not gonna. For you to get declined with a company like mine means that you must really be down in the dumps. I mean, because at the end of the day, if they don't qualify for shit else, sell them credit repair. There's always a service that we can offer. If you have a 500, you don't qualify for nothing. Listen, Johnny. Credit repair this right now. We'll give you some business strategies to hopefully, we'll give you some marketing strategies so that you can spruce up your clientele so that you can do something. But at the end of the day, you can always sell credit repair. There's a sale to be made on every single phone call, and we have all the products for you to go ahead and make some money. But yeah, Radical, cue up the music. You already know what time it is.
The deal room.
Yeah. Ladies and gentlemen, I'm Darren Mills. To my right, my co-host Jose Martinez. To my left is Joey G. We got standing there, Julian
My
at the
broker's
end.
connection.
Listen, next week we are going to be in Miami. I'm still trying to see if these guys want to do another Miami stream like we did last year, from our high rise. I want to see if Jose is going to allow it. But other than that, we're going to have a vlog going on so you guys can see some of what we're going to do down there. We have a conference that we're going to called The Banked, which we are one of the sponsors. We're going to have a booth. We're going to be showing everybody what we do, not just here on the podcast. We're going to be showing everybody what we do in person. We're going to shake hands. We're going to do a meet and greet with some of you guys that are down there. We're going to have the link in the description. And other than that, ladies and gentlemen, enjoy your evening. Take care. Brush your hair. And, of course, happy Black History Month. Stay up, everybody.
Yeah, y'all.
The deal room. By broker's connection.